A historic shift. The Fed cuts rates. Written by Robert J. Schiller from Yale University. The Federal Reserve made a significant decision. It lowered interest rates. This is the first cut since the start of the COVID-19 pandemic. The benchmark rate fell by half a percentage point. It now sits between 4.75% and 5%. This move signals a change in the Fed's approach. They are shifting from raising rates to cutting them. This rate cut is historic. It is the first in over 4 years. The Fed had been steadily increasing rates. Their goal was to combat inflation. Now, the focus has shifted. The Fed is prioritizing economic growth. This change reflects a delicate balance. The Fed must manage both inflation and growth. The rate cut has sparked much debate. Experts are analyzing its potential impact. They are looking at various sectors. Borrowing costs for businesses and consumers are key areas of focus. The overall stock market performance is also being watched. The coming months will be telling. The full effects of this rate cut will become clearer. This rate cut is a significant event. It reflects the Fed's evolving response to economic conditions. The impact of this decision will be felt across the economy. Why the cut? Inflation and jobs data. The Federal Reserve's decision was driven by data. Economic growth is slowing. The Fed aims to stimulate growth. They also want to keep inflation in check. The economy has shown resilience, but there are concerns. Job growth and consumer spending have slowed. Inflation is moderating. However, it remains a concern. The Fed has a target inflation rate of 2%. They cut rates to prevent inflation from falling too low. Deflation is a risk. The Fed wants to avoid it. Lower borrowing costs should encourage businesses. They may invest more. They may hire more workers. This would boost economic activity. The rate cut also aims to help consumers. Borrowing money will be cheaper. This could lead to more spending. Increased spending would support economic growth. The Fed's decision is a balancing act. They are trying to support growth without igniting inflation. The coming months will reveal if they have struck the right balance. Political battlefield, reactions to the Fed's move. The Federal Reserve's rate cut has drawn political responses. Reactions have been mixed. Former President Donald Trump weighed in. He suggested the move was political. He hinted at potential interference. He believes it might be an attempt to influence the upcoming election. Vice President Kamala Harris had a different view. She welcomed the rate cut. She focused on the potential benefits for Americans. She believes it will help people struggling with high prices. She sees it as a positive step. It could ease the financial burden on households. Fed Chair Jerome Powell addressed the issue of political influence. He emphasized the Fed's independence. He stated that the rate cut was based on data. The Fed has a mandate. They must maintain price stability. They must maximize employment. The Fed's rate cut has become politicized. This highlights the challenges of navigating monetary policy in a charged political climate. Section 4. Market reactions. Uncertainty and volatility reign. The stock market reacted to the rate cut. It is known for its sensitivity to such changes. Volatility was the immediate result. Investors had mixed reactions. Some saw the rate cut as positive. They believe the Fed is committed to supporting the economy. Others were less optimistic. They interpreted it as a sign of economic weakness. Stock prices fluctuated after the announcement. This reflected the mixed sentiment. Some sectors benefited. Technology and consumer discretionary stocks rose. They are seen as benefiting from increased spending. Other sectors faced pressure. Financials were hit due to lower interest rate margins. The bond market also reacted. Treasury yields rose. Investors were adjusting their expectations. They were anticipating future interest rate movements. The rate cut has increased uncertainty. Investors are closely watching economic data. They are also watching the Fed's guidance. The market's reaction to the rate cut highlights the uncertainty surrounding the economic outlook. Section 5. The path ahead. What's next for interest rates? The Federal Reserve's rate cut is likely just the beginning. More adjustments are expected. The central bank has signaled its intentions. They are willing to lower rates further. They want to support the economy. They are also focused on their inflation target. Projections suggest more rate cuts are coming. At least one more is expected before the end of the year. The benchmark rate could fall closer to 4.5%. However, the pace and extent of cuts are uncertain. Economic data will be key. Inflation and employment figures will be closely watched. The Fed is in a monitoring phase. They are watching the impact of their policies. If inflation accelerates, they may change course. A strong labor market could also alter their plans. The path of interest rates is uncertain. It will be a key focal point for investors and policymakers. The future of interest rates is uncertain. The Fed will continue to adjust its approach based on economic data and its objectives.